something there. I'm thinking maybe a base for, this long actually might set up something interesting. I mean, look at this. This is a 50-year monthly chart of Intel going all the way back to inception. Okay. And you can see what we've done is basically gone sideways now since 97. And I think the play here, guys, is that Intel now is the U.S. government's onshoring experiment for fabrication. So what they're going to try to do is turn Intel, and the rumors are out there, they're going to try to turn Intel into Taiwan Semi so that we can actually make chips here domestically in the United States and kind of get this Taiwan risk off the geopolitical plate, if you will. And if you'll notice, the bottom was when the U.S. government took a 10% stake. That was at the VWAP. Interesting. I'm going to keep my eye on Intel. You got NVIDIA coming in there backing them. A lot of interesting stuff happening, so keep your eyes up. We put this on the last call. The last 2 years were about whether AI mattered. The next phase is about where it shows up in earnings. I think that's critical. I think you're actually going to see that begin to happen in the bank earnings on the next earnings cycle, which is coming up this week. And if you think about it, banks could be major beneficiaries of AI as they're able to lay off people and raise their margins. So I'm thinking banks may have more of an AI play and more margin sort of opportunity than people maybe think. So keep your eye on the bank earnings this week. And finally, you got to give it to our president. He definitely keeps things interesting in the markets. Mortgage bonds rallying, mortgage REITs rallying. I had told you guys, for any of you income players out there, about Two Harbors, that mortgage REIT that I'd been buying, not knowing that the president was going to tell everybody to buy mortgage bonds. But nice pop there in the mortgage REITs, in mortgage bonds. You see it over in some of the other ones that we've thrown out on the call as well. But interesting times with Donald Trump in office, always in the markets. Okay, let's get to it. Guys, I'm actually going to spend less time on the macro today and more time talking stocks, because that's what we do when the markets are cooperating. That's what we enjoy doing. That's what I want to do. And so when things are okay in the funnel and we're not too gunked up, we tend to talk about stocks. But I really like this setup we have in the Russell 2000. This is a monthly chart. I think the Russell has finally set itself up for this big move that we've been talking about for 2 to 3 years. It seems to be happening. I think you've got a tremendous amount of support right here at these previous highs. So it's very unlikely to me that we correct with any depth here in the Russell. And that has me really geared up for maybe what's going to be a great environment for stock picking. The S&P 500 is up for the first 5 days of this year. What's even better is the NASDAQ 100 is as well. In years with positive starts, the NASDAQ finished higher 25 of 27 times, averaging 25% for the year. So we've got good historicals, and I've gone through some of these before, but this is a newer one. NASDAQ 100 up after the first 5 days of the year. You can see pretty much every year except 2002 and the technology bubble end. And then here again in 2018, only 2 years when you didn't finish up strongly. Breadth continues to strengthen. For the first time since 2021, over 90% of the Dow Jones stocks are above their 200-day moving average. In past instances, this kind of breadth expansion was always followed by higher Dow and S&P prices 6 to 12 months later. And you can really see it in that clean Dow chart we've been highlighting for you in the wrap every day, talking about how this was the cleanest of the major indexes, smoothly just rising up every day above all the key moving averages, including the short-term 21-day. Just a nice continuous run in the Dow. But that breadth is a great sign. It's what we've been talking about this market needing for years. And the fact that it's coinciding with the Russell improving, I think, is a great sign. We've got what looks like a volatility contraction pattern that played out in the S&P 500 that now we should break out of. And I think what that's going to look like is something like this with a move up to about 7250 in the large cap index. Okay. We've got this nice little coiled triangle in the Qs that we started to break out of. We're backing up against it again today, but I think it holds, and I think ultimately we wedge out of this pretty vigorously. So what I'm telling you guys is I'm fading these assholes at the New York Times. Okay. And we've been fairly consistently bullish for the last few years. Even when things got ugly towards the end of last year, I never fully believed AI was a bubble. And I think that crowd is being slowly proven wrong at the beginning of this year as well. So we've got good sort of reasons to believe that, you know, this is going to be a good solid year. 2026 is an election year. We do expect some volatility surrounding the midterms, but I think that's going to come in the second half of the year this year, towards August. So we'll see as we get closer. But the inflation situation seems to be moving our direction. I've got true inflation still trending towards sub 2% numbers, fluctuating somewhat. And rents definitely are a big part of that, as we have talked about. So as we get the PCE later in the month and the CPI next month, if we get further cooling, I think that just really does a lot for the case for further cuts in rates, further upside of the Russell, and maybe finally some more bond buying across the long end of the curve, where maybe you could get mortgages down a little bit to juice this housing market and kind of give the overall economy a boost outside of AI. Here's this problem, though. It's this run rate we've had in the CPI, and it's still creating havoc in people's lives. If you're not an asset owner, if you're not an individual who has been able to, sort of keep pace with the inflation that's happening in your everyday life, you feel it. And it's tough. And there's a lot of people out there in America right now that are struggling. So we've got this K-shaped economy that's being driven by the wealthy and consumption at the higher end. We need further improvement. We need further growth. And we need all this to happen quickly, because you don't want the president's agenda to be derailed in the second half of his presidency because he's lost the midterms. Okay. We've got just a 5% chance of a rate cut in January, down from 17 a week ago and 22% a month ago. It was asked over the weekend in the direct access thread whether or not I thought the Fed not cutting was a big deal this month, and I said no, because the market was not anticipating it anyway. So the real test will be at the next meeting, and whether or not they begin to sort of start that cutting cycle again sooner rather than later. But for now, I think we're in the clear as it relates to that. You just want to see good inflation data and employment numbers that aren't running too hot, which right now that's kind of where you're at from a Goldilocks sort of just right perspective. Okay, the trend has been volatile. We've been going back and forth between 3 and 4 and 5. We've never really gotten down to 2. We're at 4 or 5 now, which is fine. It looks good. We need Bitcoin to improve a little further to get back to 5 or 5. So we're not there yet across the board, but we're waiting for further improvement in Bitcoin, which is a part of the algorithm. Not a huge component, but big enough to keep it from going to 5 or 5. So keep your eye out on the trend model. That's in the wrap every day. Remember, you want to be most aggressive when it's going up. 2, 3, 4 to 5 is the zone you want to be in. We have kind of entered in the chop. Now I just want to see, let's go from 3 to 4 to 5. That would be kind of sign again to press the accelerator. Pretty simple system. We designed it to be so, a little less sensitive to the changes than the IBD trend model and some of the other trend models that we follow on the calls with you guys. But anyway, we're at 4 or 5. So the conditions are pretty good. We are trading. You should be too. Okay, earnings. I wanted to share this one out because I think it's really important. The S&P 500's revenue per worker jumped to the record highs after 15 years of stalling out. This is the big productivity jump that we want to see, that we haven't seen. This is AI going to work right here. Okay, so it's starting to show up in the data. It's early, but you're going to see more of this, where people make more money with less. Okay. Now, I'm not talking about the consequences from a societal perspective on what this is going to do to employment and all these things. That's a whole other different discussion. What I'm talking about is earnings at S&P 500 companies being driven by efficiencies gained in AI, and then margins being improved by laying people off. That's the game that will be played. Okay. Hey, earnings are expected to remain strong, coming in at 306.06 per share in 2026. We've told you this over and over again. We're at record percentage of GDP in terms of corporate profits. The Russell should be the leader. I think that's why you're starting to see it in the price action of the Russell itself in terms of earnings growth. We got consensus forecasts of nearly 50% EPS growth for the next year for the Russell 2000. This follows 2 consecutive years of negative earnings growth, so that's the change. Value is also closing the gap this year on earnings. This is also part of the reason why the market's broadening out. Isn't it kind of interesting how earnings ultimately drive everything over long periods of time, guys? Don't forget that, okay? Short term, the stock market's a voting machine. Long term, it's a weighing machine. Right now, the earnings are going to come in better for value. So those stocks get better bids, the market broadens out. That's what's happening right now. Just want to see that continue. We want to see mid caps and small caps benefit from a lower rate environment that comes, and we want to see some of these unprofitable companies start to turn a profit. All right. Now we get to the section you guys really care about, which is the "What Are We Watching" section. And let me tell you, man, this has been a good. We've had some good stuff in here recently, so pay attention. I've got some great lists in here you're going to want to keep, and we're gonna be talking about a lot of stocks. Okay. Here are some growth stocks that are leading in 2026. Okay. Many of these you will know. Some of these we've traded. Some of them are on our lists. Okay. We got this BKKT, SKYT. This SanDisk trade has been unbelievable. KTOS and AVAV in the drone space. BE and Oklo in nukes. We caught Oklo and BE last week. We've got SMR in there. ONDS we've caught big time in the long term. It's in the sector rotation as well. Serve, NVTS, ASTS looks like it's getting ready to break out again. EOSE doesn't stop. That's our battery play we talked about. We got HUT, Open, MP, Rocket Lab, Zeta, IREN, and MU. These are some hot names, guys. I think they're going to be names that you see more of. Other strong sectors and stocks. Broke this down by sector. Memory still hot, guys. We got MU still running over in the sector rotation portfolio. Drones. RCAT's on that list, not in the other one. Semiconductor equipment. We nailed AMAT and ASML in the sector rotation portfolio. Advanced packaging and chiplets. We just threw Intel out at you. TSM is also on the long-term list. Semiconductor testing and inspection, KLAC, we're going to take profits in today on the long-term list. We've got fiber optics like Light, Ciena. We're going to sell Ciena today too as well. That trades continue to look good. AI infrastructure, MBIS, APLD, we played successfully. We got VRT that's popped up a bunch. IREN, got a chart I'll show you there. Cypher. So we got a lot of names in that AI infrastructure data center trade. Robotics, Tesla, Amazon, I just threw at you. TER has been on fire. The space trade has probably been the best trade all year. Rocket Labs, ASTS, RDW, LUNR. We got Oklo and CCJ and URA and UEC in the nuclear space. CCJ, we call it in the sector rotation portfolio. And then over in new IPOs, Carmen, we've caught for a huge run here in the long-term trades. And this FIGR, I am watching very closely. So guys, a lot happening. A lot of stocks. We're in a lot of these. We're trading a lot of these. As I told you earlier, I think we're coming out of this wedge. We showed you that last week on the call. That's kind of what happened. Boy, did we ever nail that silver trade. Hope you guys are still making some money. I think ASTS is getting ready to break out. The fib extension is about 135. It trades very choppy. So just know that when you go in, it moves around a lot, but we've traded it very successfully. It's on our longer term list. I am going to take profits on the long-term trade, not because I think it doesn't go higher, but just because we run a trading service, so we have to take profits. Oracle's your watched canary in the coal mine. Looks like it's trying to bottom. That's helping the whole AI trade. there's that Micron trade. At some point, guys, I may have to sell that stock and take gains. I don't want to give up huge amounts. It's gone parabolic. It'd be lovely if it could base out up here really high, but we'll see. Okay, so we called gold at the Academy. Okay, for everybody that was there, we're literally like right here. We called this move in gold. Said it was the biggest head and shoulder pattern we had ever seen in our career. Okay, so we called the silver move for you guys on this call. We've been calling this copper move, right? It's been happening. All right. You see it in the SCCO, ERO, FCX, all those names are running. I've told you that these data centers can use up to 250,000 equivalent residential homes worth of copper in them. Okay. So the demand is there and it's not going away. But now I think you got to watch energy. We got gold and copper, now energy. The charts look very similar. Very similar setup. We showed you all these on the last call. Look at ExxonMobil on the monthly basis. You see it? Look at Oxy on the monthly basis. You know, Warren Buffett's not an idiot. Okay. This guy's he's early. He's fucking early. There it is. At 11:24. There's your F-ball. Okay. He's early because he's always early. Okay. But he sees the value. Hey, commodity producers relative to the MSCI world are at an all-time low. We've got global commodity equities finally rallying, breaking out of this big triangular wedge. But look, guys, we're basically back at a high that we were at back in 08. Okay, this is the big 08 commodity run that was driven by the China narrative. Okay, remember, China's never going to stop buying everything. They're buying all the copper, they're buying all the gold, oil, everything. That was the narrative. And then, of course, China implodes. Guys, I watched this fascinating interview with a Chinese dissident who says that China's population is only 800 million people, that they have lied to the entire world, and that the population of China is much, much lower than people think. And then I saw a scientist who evidently has calculated the per capita consumption of salt in China. And basically says there's not enough salt being consumed in China for the number of people that they claim to be alive.
That's a genius way of getting
it. And it does, but anyway,
I love it.
It's this failed narrative, guys. But what I do see now is this commodity narrative is kind of resurging on the back of sort of this nationalist quest for minerals and energy, right? And this mineral thing with Greenland is obviously, coming to the fore, and then Venezuela is mineral, heavy. So we've got major players all over the world making geopolitical moves to acquire these base metals. Okay, and here's this giant base you're coming out of, right? And we've shown you stocks like FCX, right, which now have started to move. And, there you go. There's your FCX. Let's zoom out and take a look like on a 20-year monthly, and you can see how we're just getting into price discovery, guys. So, you're just taking out previous highs. Now's when you start to run. You got a fresh MACD crossover on the monthly. So I think this metals trade isn't done. Look, we're long a lot of this stuff in the sector rotation trade. Barrick's in there. It's been a great name. ERO's in there. Probably shouldn't have sold on Friday, but did. We've had UAMY pop up recently. I've got MP coming up on a lot of screens again. So there's action in that metals trade, and we're going to continue to follow it. Hey, Oklo, we had this. We showed you this on the call. Man, that was a great trade. Oklo has this habit of exploding off the 200-day moving average. And I had sent Dutch that chart, and he had gone in size, fortunately. And man, we got that bounce right there on cue. The system caught that. Victor Nostradamus caught this and historically shown that when Oklo had hit the 200-day, it was a great entry point. But that's why you get on these calls, guys, because we're laying some of this stuff out before it happens. There was Iran last week that we showed you. That was at 42. We're looking pretty good on these recovery trades that I've left on in the long-term charts. You can see Iran pumping nicely today. We're at 49. That chart I showed you was at 42. I think this whole group looks good. Let's go through all these charts. There's Cypher. That's why I left those two on over the weekend. I was feeling I was worried. I was a little worried about it, Dutch, leaving those on. I was like, man, I've left these on over the weekend. We're going to come in and get our hands slapped on Monday, but we didn't. But you see it in APLD. This was the pattern. Looks like, I think they're all going to follow APLD. APLD crushed their earnings, broke that trend line. I think that's what you're going to see in these other names, like Cypher, like Iran, like MBIS. Feeling less stupid about MBIS every day, y'all, leaving that in the sector rotation portfolio in such size.
Look, you said that thing was going to get bought.
Hey, I think the hyperscalers before the end of the year will make an acquisition of one of these. Hey, Dutch, the one that we're not in that we should be in is HUT. It's been leading. I don't know why I didn't get in it. It's a little choppy and it's a little more Bitcoin correlated historically, but you can see, man, that one's ramping up. But yeah, hey, these hyperscalers are going to figure out it's cheaper just to acquire an MBIS or an IRN here than it is to rebuild that widget. Hey,
That's
Tesla's
great.
bottoming out right here. Tesla's bottoming out and Apple's bottoming out. And this is important because I think this is what's keeping the queues from running. Let's look at Apple. Apple had been down 8 days in a row, and I had said something about it. I was like, Apple will not go down a 9th or 10th day in a row. And here's your bounce. I think once you get Apple to kind of bounce here, the queues will come back alive. Tesla trading kind of with it. Tesla sold off on the NVIDIA driverless initiative. And Musk came out and said, look, guys, solving 99%, in fact, 99.9% of autonomy is pretty easy now. It's done. Okay. It's the fringe cases when you're driving that are now the real science. That is where Tesla is 10 years ahead of everybody else. People just don't get it, and they still don't, but they're going to figure it out eventually. The other thing I'll tell you is I was listening to the All In podcast, and Chamath was on there, and he had gone to tour the Optimus factory with Elon, and he made an interesting comment. He said Optimus is going to make everybody forget that Tesla makes cars. It will be the most ubiquitous technology ever built, and that its hand dexterity is already going to surpass humans. Like it can screws on faster than a human being can. So I think the progress that they're making in the hands is going to blow everybody's mind, that you're going to have surgical hands that are better than doctors' hands. I mean, you kind of already have it out there with, the Da Vinci and Intuitive Surgical. But guys, this Optimus thing is going to be big. I still think we're early and the market doesn't get it, but it will. It's coming. Elon's not stupid, y'all. EOS breaking out of that wedge. Remember, we told you this is one of our favorite battery plays, turning into our favorite battery play. Rocking again. I think we're going to take out, man, I bet Daryl is really happy today. Shout out to Daryl. We've got this 1986 number. That looks like it wants to run to 20. But that's a great story that continues to strengthen. Hey, open door for you degenerates out there who track that thing. I think it's setting up. We're back up above the 50. And we spiked last week. Keep your eye on it, because when this thing starts to move, man, look, you got the high level consolidation that you wanted. You got the big move up to 1070, and then you really didn't give that much of it back. You managed to hold the 200-day, and you managed to kind of hold this 550 mark. So anybody that's out there in that world, keep an eye on it. It's kind of a meme stock. Don't get over your heels on it. So the real boomer, though, I skipped one. Hey, MVO is bottomed. I think that's a great company. If you're an advisor, that's probably one you might want to consider for your widows and orphans. Great divvy, trading at about 12 times. They'll get their stuff together on this GLP-1.
What largest company in Europe, right?
One of, if not the.
Right.
LVMH is one, and then Novo Nordisk is one, and then ASML probably is now the largest with the run that they've made. Yeah, because we're talking about
Right.
490 billion. Let's see where we're at. That's a good question, though. So LVMH, that can't be right. 1.8 trillion. That's not right. Anyway, so the MVO story, I think, is bottoming. That was on the $1 million slide as one of our bottoming stories. So was Oklo. But hey, guys, right now the hottest theme of 2026 so far is pretty clear. It's space. Okay. I mean, I got Lunar and PL. PL goes up every damn day. I am so pissed that I have not bought the stock. It's not on any of our lists. Satellite imaging company. But, ASTS.
I think we bought that last year about $7, buddy.
$7, man. Hey, there's ATRO at 68 bucks, man. I mean, we were in this thing at like 20.
Astronics.
That's it.
We talked to him.
RD, you did talk to him. You actually called the company. We talked, some of these guys, some of these stocks we were talking about.
We should have recorded that. We should have recorded that call.
It was funny as hell.
Hey guys, Lunar is in the running for a massive NASA landing contract. They are the favorite. Hey, look, this is why it's on the sector rotation list. There's a method to the madness. They are the favorite. They should win. The stock should pop. But
Really? Okay.
yeah, so just keep your eye on that. But look, guys, I mean, this space trade has been phenomenal, and you've got the SpaceX IPO that's going to keep the excitement kind of going, and we've had a great run with Rocket Labs, which is still holding up really well, kind of held its gains. So keep your eye on that space trade. There's something more there. I think LUNR is the one that hasn't run up that you probably get into. But hey, look, $1 million slide, space is right there at the top, along with drones, along with the data center acquisition targets. Here's the copper theme with metals and robotics. I like that Zeta and Path name. They're both hanging in there. Path is really volatile. This is a recovery play, guys. The market hates this stock. Okay, it was one of the biggest IPOs in software ever. It was a debacle. And, anytime something can survive this and the owner comes back, they've gotten some good partnerships with OpenAI, NVIDIA. They're in automation. It's not really AI, it's more automation. You've got to have the things that they automate it has to be perfect. So it's a little different, but that's one. And then, hey, this Zeta trade, this is a really choppy trading stock, but this stock is going way higher. We've had some success with it in the past. Not a clean, easy stock to trade, but I think they've made a great partnership with OpenAI that's really going to take them to the next level. Anyway, off to a great start here on this list. And I think, we're going to have some fun with it this year. All right, let's see what we've got relative strength wise. I got telecom, fiber optics at the top, computer data storage still number 2. Mining names still running at 3. There's the biomedical, medical trade. Semiconductors are right there. Energy coal is a new one. We've gone from 22 to 6. That's on the back of the data center trade, I think. Okay. There's mining and metal ores and cable satellite equipment. Rounding out the top 10 is media newspapers. And then we've had solar kind of fall down to the top 20. So you haven't had a lot of movement here, guys. We've got some stuff here in the bottom coming up pretty hard. But, none of it's super exciting outside of maybe semiconductor manufacturing and the internet. Electronic parts has kind of started leveling out here a little bit. Media newspapers, though, go from 140 to 10. That's unbelievable. So keep your eye on that. We'll see if there's a trade in there in that media newspaper jump. Remember, guys, top sectors are sectors that are moving up vigorously off the bottom. All right. System check real quick. Color guard improving dramatically. We got a lot of green spurring up. We just need a few more days where we get 2 to 1, 3 to 1 type days, advancers versus decliners, and you'll see this go ahead and turn over. That's what we want. Over on the trade triangle system, got a lot of hundreds. Got the NASDAQ at 100. All 3 trade triangles a go. The S&P, same. Dow, the same. We got Amazon leading the way. Talking about that. Here's our financials. I love the fact that the banks are running before we go into earnings. Just need to keep that moving, keep them going. We've talked about some of these. We've got them on that slide list. JP Morgan and Bank of America, all these names need to keep running. XLF is your financials name. So we need to see that this week. Keep running. There's that ExxonMobil, Chevron, Nugget, NVIDIA kind of chopping around. So you still don't have full-blown action here in tech. That's what needs to come on. So your mega cap tech's lagging. You can see softies down here. You can see Apple, Tesla, all with the daily trade triangles. So we need tech to improve, and that'll be what gets the Qs in the broader market going. Okay. Over in the short-term strategy, I don't have a current list of positions, but Dutch and I will just run through them with you. Dutch, you there, buddy?
Yeah.
Let's just run through them top to bottom, guy.
All right. So largest is Iran, and we're profitable there a little bit. Next is TNA. That's our Russell 2000 leveraged ETF. That's working for us pretty well. We're up a little bit there. We bought some biotech stocks. OPTX we hit. That's up very nicely this morning. We paid about $4.98, $5 for it, and we're running $5.39 right now. PYXS.
IBB looks like it's just basing out, guy. Here's the IBB with the 50-day. You've held it. You got a nice little box kind of developing here on the IBB. And so I see what Dutch is saying about this biotech trade. It looks like we should leg up again.
Yeah, so we had the OPTX. That was OPTX. PYXS was small company. Pyxis Oncology. Paid about $197, $2 right in there. We're at...
Give that one to me again.
PYXS. We paid, I'm sorry, current price is $1.97. We paid about $1.77. So we bought a fair number of those. So 15,000 there. So we're up about $3,000 on that already today. So those are 2 biotechs that did well for us already today. We've got that nice pop in UAMY today, which we held over last week. So we paid about $7.88. We're at $8.66 already there, so up about 9-10%. HL we picked up today, just 1,000 shares. That's silver. We're profitable there. BBAI, which we had, that's off slightly. AKTS is another biotech that we added today. We're up a little bit there. CCCX, which you picked up while I was gone, that's positive. TTMI, which you picked up, which has run real nice, so that's up.
Hey, be careful with that CCCX, guys. Listen, that's really small. That's a quantum SPAC merger.
Right.
I kind of want to I would almost tell you don't get big in it. Don't go big. Just let it kind of play out. I think it should leg up here. But it's just $780 million market cap. So I don't want all y'all leaving at once.
So TTMI worked out really, really well. And then CIFR, we added to that this morning. Let's see, did we add that? Yeah, we added about 750 shares to that today. So let's see where we're at. 1750. That's right. Okay, 1750. So that's up pretty nicely. We had 3 new ones. GILT, it's a Gilat Satellite Networks. It's an Israeli-based company. Picked up 1,000 shares of that. That's up nicely as well. We paid about 1603. We're at 1679 already. Looks like it wants to do 19. RXRX, another biotech, picked up 3,000. We're flat there. And the robotics company, RR, we picked up a little bit of that as well, and that's about flat. So we're actually up today on the short-term trading we're up about $17,000. So we're actually just crossed over about 20% in gains month to date and year to date. So we're up about 20% for the month already on this, thanks to you cleaning things out. And despite the fact that Dutch completely blew the AGQ silver call by selling it at $166, and it's now $266 in 2 days. Anyway,
guys, I gotta tell you, man, I told Dutch this metals trade has gotten hard to sit in.
Well, it traded off on us, and in fact, in the pre-market, what I said was, hey, we're going to get creamed on this on the open. We should wait for a better price to sell it. And then I didn't take my own advice, and I went and sold it. And as a matter of fact, that day it crawled all the way back up and then just kept on going. And it just kept on going.
It shook Dutch out, guys. It shook me out. I got shaken out of the gold lever trade at the end of last year for the same reason, in that it's so extended, and you start having these swings of 3 and 4 and 5% intraday, and it's gotten tough to sit tight in. But
I told them what I was thinking was, this seems to be like one where you basically buy it and you pray that the next day it opens up 30 points and you can get out, but it can just as easily open down 30 points. So
that's right, man. And then you're kind of sitting there thinking. In fact, I had seen look. This is what I'm talking about, Dutch. This is what I'm talking about. Somebody had said, "Who's trading this?" Do you see what I'm talking about?
Right.
Yeah.
I mean, this is brutal, man.
Yeah.
200 to 157, 192 to 150, 205 to 167. This is what I'm saying, guys. Sometimes when you get in these trades like this, you kind of want to get in early, and then you just want to let it ride because it gets hard to press your bets up in here when it's already moved this much. But I'll be honest with you, man. I think silver looks like it's ready to go to 100.
Yeah.
It just keeps acting like there's a bid. So let it play out.
Well,
all right. Hey,
by the way, your lunar trade's already making people money.
Well, hey, look, we added that one in the sector rotation trade on Friday. It had gapped down big, which I actually like because it gives guys the chance to get in on a big down day if we're right. And so maybe this one will leg up and join the Rocket Lab ASTS trade that's already in there. Okay, hey, that was pretty much it for the short term.
Right.
Oh, I wanted to make one more point though, guy, because you had RR. Look, guys, I see a lot of charts that look like this one, where you've got this downtrend line that is kind of supported by the 200-day. And I just think if the Russell's going to leg up here, these names like RR, they're going to break that downtrend line and start running back up. I mean, so it won't just be, it'll be a broader based thing. Like, and just so you guys will see what I'm seeing in BBAI, it's a really ugly pattern on the daily, but when you look at it on the weekly, it's a lot clearer. So I kind of don't want to get shaken out because I think you're going to get a big leg up in BBAI on the next big move. Anyway, all right. Hey, keep you posted. Sector rotation. This is not current, but the only changes that we made last week were a few sells and a couple of buys. Lunar was a buy. JBL, I think, was a sell. VIAV was a sell. But a lot of other names, it was kind of like let it ride. Silver, we got 2 silver names in there. Didn't buy enough of that. Should have bought much bigger size. But TMDX is coming back nicely. We've got obviously the semiconductor trade that's worked, the metals trade that's worked. Lord knows if NVIDIA and NBIS ever really take off, well, then we'll really be in business. We got NBIS kind of cooking now, so that's helping cause. And I guys, NVIDIA is just in the box. In fact, I am really glad that NVIDIA and Palantir are trading the way they are, because I think it really is a very tight, high-level consolidation. And, I didn't know if Palantir was going to be able to pull it off, but it looks like, look at the weekly as you slowly burn off that overbought condition without crapping out. It's a great thing. Considering this is probably one of your most bubblicious stocks out there. Here it is on the monthly. I mean, we had gotten so overbought. So the fact that you're able to come down and work that off, but stay up here, I mean, even if we were to trade sideways, that's a great sign for longer term players. I think that's a great sign for AI longer term. So Google coming on nicely. So, look, sector rotation portfolio is performing really well. Off to a great start this year. Over on the long-term list. All right, so we finally got some winners. We're going to take some profits, guys. We're getting our ass kicked over here for a little bit, but now it's time to do a little ass kicking. We're going to sell Carmen. We're going to sell ONDS. These are huge gains. APLD, we got in 1 week. Huge gain. KLAC and CIN, not huge winners, but winners. We're going to take those out. I'm buying GILT, KTOS, CoreWeave, Orla, and APH. Okay. Gilt, we just showed you. That was on the signal list this morning. KTOS is on our drone red hot list. So we're just swapping one for another. This one's at the pivot, though, with a relative strength blue dot. So you can see what I'm thinking there on the entry. And we've got Gilt, similar situation, just took off from the pivot. That was on the signal list this morning. And we've got good setups and CoreWeave, which I think is bottomed and now should run with this whole space with Iran and Cypher. And then finally, we got APH with the double bottom pattern right at the pivot as well. There's the double bottom right at the pivot. You can see it clearly on the weekly. Got a relative strength blue dot. Should run up to about 177. In a really good sector in this electronic parts, top 10. Look at, there's that Carmen. It's been a great trade. Look at that great sort of pattern that had played out. We had entered this trade and it went against us immediately, went down 10, 15%, and then turned around and went up. So that was a nice little score for the long-term list. And hey, next call, I'll do a performance recap on the long-term list. Still looking pretty good. High 60, 70% accuracy in terms of winners versus losers. So a lot of winning trades, not a lot of losers. All right, Godfather, we are at 11:52, and we're going to take a few Q&As, and then we're going to shut her down.
All right, no problem whatsoever. All right, let's see. Let's start off with the first one. If you were managing, this is from Dave Z. If you're managing yourself 2 different Roth accounts, is there any wisdom in using sector rotation portfolio in one and the long term in the other, or just use sector rotation in both accounts?
You know, man, if you looked at the performance of the long-term list, it's more volatile than the sector rotation portfolio, but it has outperformed slightly, depending on how you weight the trades. And I'll go through this next call. But they're tracking pretty similar. Guys, strategically, the long-term list is really more for people who don't like to lose and don't like to take losses. Because there are a lot of people out there that just trade that way. They can't help themselves. So I kind of specifically designed that list to be a list that you just kind of left some of those names linger. And with the sector rotation, it's kind of exact opposite. Like I cut those losses pretty quick. And then, we kind of scale into the winners. So I think if I was looking at these two things, they're very different. The sector rotation portfolio is an actual portfolio. So I'm treating it like a portfolio. I'm giving you percentage weightings. I don't know if I actually want to do that with a long-term trade list, actually turn that into a portfolio. Because I'm not really managing in that way. I'm just managing the trades. I don't scale in or out. You could be doing that. That would enhance performance. I probably should cut losers quicker, but I don't because I wait till the Monday calls, and a lot of times they get away from me, so I just let them go, and then they come back. I mean, look, we were down 50% in MVTS. Now you're down 20. That thing could go green. I've had that happen before. So, with the long-term list, the position sizes are really small. They're all the same. 2% of your portfolio. If you lose half of it on one, it's 1 or 2% of your portfolio. So I think doing both is fine. Just know that we're not managing the long-term list like a portfolio. You're going to have to kind of do that. Now, you can buy and sell when I do, and you can keep the weights pretty close to what I'm doing and probably replicate the performance pretty closely. But I think it's more of a personality thing. If you're a person who doesn't like taking losses, well, then the long-term list is a great list for you because, one, we don't take many, and a lot of those trades are winners. And, it's designed to be like, hey, you're winning 67% of the time, but most of your winners and losers are about the same size. So psychologically, some people that's easier for them to say, okay, I'm not taking a lot of losses because I'm not losing a lot. Guys, the more profitable route is to lose more and let the trades run longer, right? And of course, that's what we're doing in the other strategies because we're less focused on winning percentages. I'm literally trying to keep the winning percentage really high on the long-term list because some people just really struggle with taking losses. So if you don't lose a lot, they just have more confidence in the list because they're like, hey, you know what? If I do 10 trades, some of them are going to be winners. So I'll just keep my sizing kind of the same, and I'll just do that as a process. We are not tracking that long-term list as a portfolio. We are tracking the sector rotation list as a portfolio. So keep that in mind. Next question.
Yeah. So Jerry asks, what the hell is going on with Meta? That's a good question.
Look, Meta is trying to figure out if this AI CapEx boom that they've been going on is going to be monetized. A lot of people don't like what they're hearing that's coming out of Meta. Whether they're a big AI guy that they have paid some ridiculous sum of money to. He left and kind of said they're going down the wrong path. And there's been a lot of shakeup at the team. I think Zuckerberg has been involved personally in firing some people and shaking up the team. So I think the stock's just trying to figure out whether or not Meta's going to be able to monetize this AI CapEx spend. And right now, they just don't like, what they see, what they're hearing. I'm sure they're wrong. I think Meta's a great stock longer term, but I just don't think this is a name you want to be in here from a relative strength perspective right now. I would much prefer Amazon out of the mega caps, and I would much prefer Google. That's in the sector rotation list. And then, of course, I think Tesla has more going for it right now in a real world AI with FSD than Meta does. So that'd be my thought. Nothing wrong with it. It's just right now, relative strength is probably, let's see, I bet it's really low. Probably sub 50. Let's see. 31.
Wow.
And what you probably have is a giant flat base that's developing that you're going to be in for a while. So I would tell you, I would say Meta is probably dead money.
Got it. Yeah.
Next question.
Yeah. Doug B., I think Dutch actually brought this up on Direct Access today. Any hope for RR? And he also brought up STOK. But I know he talked.
Yeah, look. RR is, I think I just drawn you that triangle. I think we're getting ready to wedge out right here. You've got earnings coming up in 40 something days. That could be a catalyst. I don't think they're going to make a huge amount of money just yet as these things roll out. Look, this is a really small company, guys. $500 million. So just know this is really speculative. But they make real world robots, right? And you know, I think you've seen some of their security robots already kind of being rolled out in some locations. But they make these little, you know, products are real. They're real companies, just early, guys. Always remember to come and, you know, do your due diligence. The boys over at Seeking Alpha don't like this one as much, mostly because of the dilution and valuation. But I think it's I think it's one of these names that if the Russell starts to run really hard, then it's going to run up to $7. And there's a lot of stocks out there like that. Next.
Yep.
Hey, but don't be palling into RR like it's some great fundamental thing. If you like robotics and you're in it for the long term, then Tesla's your play. And the boys at Seeking Alpha don't like Tesla either, but they don't know what they're talking about.
Let's see. I think we talked about Duo. Bradley F. Duo is on the $1 million slide. Is it a bottom feeder yet? Today's drop in entry.
What's that? What was the ticker? Duolingo?
Duolingo, yes.
Yeah. Hey, look, everybody's starting to kind of wonder what's happening here. I think you're getting a sell-off again today because I'm hearing the iPods translate now.
That's right. They do amazing.
Yeah.
They do freaking ridiculous.
So you're seeing some pressure here. Look, you know, if you're playing in Duolingo, you're bottom feeding, you're catching the falling knife. I think you've got a little bit of an RSI divergence here. Note that this is not on any of our lists other than this slide. And if I had to pick one bottom feeder here, I'd probably go MVO. That's the one we hit last Thursday for a trade, but yeah, you know, look, the Duolingo thing is, you know, becoming kind of a question of whether or not, okay, if the daily active users aren't really declining and, you know, we've got compound annual growth revenue still running, eventually the market's going to have to acknowledge that the selling's overdone, but it can keep going. So make no mistake about the market's ability to stay, you know, irrational longer than you can stay solvent. Next question.
Yeah. James R. with IWM looking like it finally moving up. Why not something to play with short term?
TNA is on the list.
IWM.
Yeah, no. IWM TNA is the levered version of IWM.
Yes. Yep. 100%. Good deal. Let's see. Oh, okay. Thomas W. brought up OPTX and PYXS shot up before we could buy. Do you think they're still buyable here?
I gotta tell you, I'd be careful on buying the pop here. You can see on the 5 minute. Let's go. There we go. You kind of have given some of this up. You needed to hold here around 5. I wouldn't chase that here. You know, maybe if it gives you this and starts back up. But no, I wouldn't chase here. What was the other one? I think it was probably a little bit too far too. What was the other one?
Yeah, it was. What was the other one we bought today? 1 second. I had already clicked out of it. Oh, sorry, man. Where'd it go? What was it? TT. Yeah, it looks like it already went away. I'm sorry.
All right, next question.
Yeah. Sorry about that.
No, I wouldn't chase either one of them.
Okay. Got it.
And I'm sorry I don't have that list in front of me because Dutch just went through it and I don't. Those are trades that we had done this morning. I don't have them in front of me.
Yeah. Okay. And I'll find it when you did the next one. Let's see. What about JBL in the long-term portfolio? What do you think of it?
Look, we're basically flat, and you're still in the base. They did the acquisition. Needs to leg up here, or I might get bored and go to something else that's moving more. You can see the pattern is still the same. Would have hoped you'd gotten continuation once you broke out. You didn't. We'll see. Next.
Okay. Yep. Pat brought up, Pat C, thoughts on ELVA.
So I've seen this one a few times pop up on my screens recently. $400 million market cap's why we won't trade it. But, you know, look, guys, you can always come and hear the story. So we got forklifts. Is it electronic forklifts? What is this? So we got father and son, 20-year history as a public company, essentially under the same management dynasty, a father-son team who holds significant voting interest. This is very fascinating. I do not know this company well enough to speak about it, but I am glad you brought this up. Okay. ELVA, $400 million market cap. A lot of insider ownership. Let's do a little more work. Choppy stock to trade. Don't know enough about it to tell anybody. But yeah, great find, man.
Yep.
We'll do some due diligence.
Yeah, and that other ticker was PYXS. Back on that other question.
PYXS.
The other one that shot up.
It's
Yeah.
at oncology. You know, this one's holding up a little bit better, but still you're buying a 13% spike. You know, maybe if you hold $1.95, you could enter this one.
It's a tiny company.
Super $120 million market cap. So be careful.
Marina brought up, is now dead money, NOW.
It is and has been. Right? Now, you know, you've probably gotten to a point where things are getting interesting.
Right.
But guys, remember what we teach at the Academy. You know, I know I've got a slide on there of bottom feeders, but what we teach at the Academy is we buy stocks that are at all-time highs. Like, that's where you want to be. And if they're not at an all-time high, you want a correction that looks like it's over, right? So, you know, I think for a name like ServiceNow, what you've got is a market that has no idea how to assess the multiple for a software company. And so you get this. It's look, CRM's kind of the same problem. CRM's been dead money for 5 years. Nobody knows what multiple to put on software because nobody knows what's going to happen. And you can write code now for free. So
That's what I was going to say. Yeah.
you know, how much value is there in coding in general? These are like existential questions, guys. And hey, what I'll tell you is this: semis are kicking software's ass as a sector. Okay, so look at the sector rotation portfolio. Where are we at? We're in semis. Why? Because they're kicking ass. I don't own any software. Why? Because it's getting its ass kicked. Right? So there's a lot. Hey, these questions are always revealing because at least half of these questions are people holding on to dogs. Like, let them go and move on to relative strength. You could have been in an ASML for months instead of riding ServiceNow. Don't get me wrong, ServiceNow is a great company, and that stock could bounce. And some of this is time frame, guys. Like, if you're like a person who just, guys, I knew a doctor that made a shitload of money, and all he did was buy $10,000 and $25,000 blocks of stocks that he liked, and then he never sold them. Ever. But some of those $25,000 stocks he bought would literally go on to be worth like $250,000 and more because he would let them go. He would let them run. Okay. So you need to decide where are you a trader? Because if you're a trader, then trade with us. Pick a time frame. Be short term, be sector rotation, be long term. Okay. If you're an investor, buy and hold some of these companies forever. Hold ServiceNow for 10 years. It'll probably be higher. Okay? But don't follow us in and don't follow us out. Okay? So like today, I sold ONDS in the long-term list. It's still in the sector rotation portfolio. Okay? So you can decide, but follow what we're doing. Okay, and then if I sell it off the sector rotation portfolio and we're not trading it in the short-term portfolio, then don't ask in 2 calls, hey, what about ONDS? We sold it. Why didn't you follow us out? You followed us in, right? So keep that in mind as you're managing portfolio. And hey, sometimes, guys, the answer is there is no right answer. If you've bought shares in a great company and you want to hold them, hold them. Okay, look at Carvana.
Yeah.
Okay. Like, you could buy Carvana and feel broke and then feel rich.
Mhm.
Like, this is one of the greatest companies turnarounds in history. So, hey, Apple, everybody talks about, I would have just bought Apple, and held it. Okay. The problem with that logic is Apple had an 80% drawdown from 6 to 230. So you either need to be out with a process that tells you when to get back in, or you probably should just do what Kramer says and just buy Apple and forget about it, right? But we teach you guys how to trade. We try to help you find a time frame, and then we give you the discipline of riding your winners and cutting your losers. Okay, focusing on relative strength over valuation. Okay, staying in the top sectors, buying into consolidation patterns near their pivot. This is all the stuff we teach at the academy. Okay. Anybody else? Any other questions?
Yeah, well, my son says to me, it's the same as when we used to tell our parents not to buy CDs or DVDs anymore because everything went digital. He said, that's how you think of software now. He's like, he said, that's your tape player.
Yeah, it's just, it's outside of a few companies like Palantir. The rest of software is trying to figure out what in the hell they are doing and what they are going to be worth in a post-AI world.
So I do have a question. So BABA, which is up bigly today, question on that.
I think Baba is breaking out of this pattern, this wedge, and should go higher. I don't like Chinese stocks. I like Chinese stocks less than I have maybe in the past. But look, I like Alibaba and I like Tencent. Those are the two worth owning in China.
And with what
Tencent's still the outperformer, though.
right? What Trump is doing with the capping potentially the credit cards stocks like U.S. Bank, USB is down pretty big today. What are your thoughts on these?
Look, man, I thought maybe that would help like affirm some of these buy now, pay now later, but it isn't today. Look, the stocks hate what he's saying.
Yeah.
The banks too. So a lot of companies out there make money off credit cards. I don't know how I feel about a decree from the president on what the cap on credit cards should be as a capitalist. But nonetheless, you got to just take it for what it is. He keeps things interesting. I would note that, Visa has been dead money for a while. So has MasterCard. Amex has been doing okay. AMX, I think, has outperformed American Express. What's the ticker on it? AXP? There we go.
All I can say is it seems like 30% is a little wacky.
That is a little high. I mean, that does hurt a little bit.
Yeah, hey.
I mean, come on, man, right? I mean,
Right. Well, Jen forgot
like
to
right-
pay off
that's
her
right.
card, and it
that's
it
like
hurt her.
that's like right below the guy who sits at the end of the bar at Piero's.
Yeah. Hey,
I know that guy. We've met him.
it beats the payday lenders though that are annualizing like in the 80s and 90s,
Right.
right? So anyway, okay, but hey, credit cards, Visa, MasterCard, AXP. I mean, look, dude, this is a threat to their business. Capital One, across the board, right? I mean, there's another. They're not gonna like having a cap on their profits, which is what you're saying. All right, hey Godfather, give me one or two more and let's wrap it up.
Yeah, let's see. I think we talked about AGQ enough. Someone asked you, so you had mentioned starting the $250,000 account for the long term in 26 to show tracking. Do you think you're still going to do that?
I don't know, man. I'm gonna do a performance overview on the long-term trades next call. So I'm gonna determine between now and then how we're gonna try to track that more effectively. Guys, we're in the midst of a major operational overhaul when it comes to the dashboard and the wrap. Be patient with us, but it's coming.
We've had some really good comments from you guys that have been very helpful, so we appreciate it. Thank you.
Yeah, so we're working on it. We always take your feedback. We're gonna make the dashboard be your source of what's current versus the wrap, and we're gonna make sure those positions get updated regularly. So I'm gonna have the long-term trades updated after this call, and then on Friday we'll have the sector rotation trades updated on the dashboard, so you can look at them there. And we're gonna have the wrap kind of redesigned a little bit, so it's easier to navigate and some things. So there's a lot of stuff coming down the pipe. Just be patient with us. We'll improve your user experience, and until then, we're just gonna keep giving you great stock picks, which is why you're here. So thanks. Hey, give me one more.
Yeah. All right. So Doug G asked, could Z look at RVMD, Romeo Victor Mike David?
Why have I heard? It's Revolution Medicines.
Says I learned of this when it was $37.
$22 billion market cap. Wow. The biggest biotech I've never heard of.
Yeah, it came up the other day and I was just like, holy smokes. But I mean, some of these biotechs, that's why, you look at something like PYXS and some of these other oncology stocks that look like very small, tiny companies, they can blow up pretty big. Revolution just did that.
So shares soar on pancreatic cancer study. Strong buy as acquisition prospects continue to circle. Take the win and sell following large moves sparked by buyout rumors. So we've got a buyout rumor because evidently their pancreatic cancer drug works.
Which if you think about it, once you're diagnosed with that, it's done.
Yeah, it is. I mean, it's kind of like a death sentence. So anything that would work here would be a huge market.
Huge.
But guys, this is the nature of how this works. You've got a bunch of small little companies with very small pipelines with just a handful of drugs. They develop them, they get them through phase 3 or through phase 2 to phase 3, and then the majors come in and assess whether or not it's going to be real, what the market size is, and whether or not they should pay up for it. And then
I got to tell you, it's funny. I was out of the ranch this last week, and I met with a guy who's a big racehorse guy, and he's like, all these people, they get 1 or 2 horses, and they get in there, and they just continually lose money. And he said, this guy's a real winner in that space. And I said, well, how do you do it? And he goes, I buy 25 horses. And he goes, I buy 25 horses. And I said, well, then you're just like venture capital.
Exactly
like venture capital. I said, you buy 25 horses. He goes,
2 of them hit.
He goes, exact number he said. 2 of them can run. The rest of them, they just don't make it. That's all there is to it. They just can't do it. But 2 of them hit. And when I get 2 of them to hit and 1 of them goes to Kentucky Derby, it's all worth it.
And then you send them out to pasture and you get all your money back and then some.
That's right.
Z, Daryl, this is a question from last week. This will be the last one. Daryl S. said, home builders, what are your thoughts? DHI, nail. We haven't talked about home builders.
Yeah. Hey, you know what? Thanks for bringing that up. That's a great question. And I brought it up on the direct access a thread over the weekend. Look, you've got a real pop here in these home building stocks. There's the ETF. Our favorite has always been like DR Horton, which is up nicely today. You got Toll Brothers. Look, Toll's looking really strong. They like this mortgage drop, right? So that's a big thing for them. Guys, look, the government's actively trying to unfreeze the housing market because it is frozen.
Yeah.
And it's frozen because you can't sell your old home and go into a new mortgage. So you need mortgage rates to come down. That's going to unfreeze your supply. I tend to also, look, there's a lot of things going on in housing. The problem with housing is I don't think we have a shortage. I think we have a shortage of affordability. We have a shortage of affordable homes. So, maybe some of the lower end players could benefit, but, the high end market's held up better than the low end. I don't have any super favorites in this space. Green Brick was one that was focused in the South that I thought had more upside than others, but I hadn't looked at it in a while.
It's good for us for a long time. Remember, that was.
This might be one that could be interesting. You're very small though compared to like the DHI, which is a $40 billion behemoth.
And he brought up NAIL as well, NAIL.
Yeah. Hey, look, I think home builders are a much better business than they used to be. They don't do the whole land banking thing. You don't have huge balance sheets with all this land sitting on it. They're all pretty good operators. I just think it's a shitty business. It's low margin. It's high. It's capital intensive. It's people intensive. Yeah. So I don't disagree with the observation. I think it's a good sign for the economy. We might trade DHI or so. You might get like a Rocket Mortgage even that's benefiting. That's another tough stock to trade, but up much higher than when we brought it up on the calls. In fact, we brought this stock up much lower. I think we brought it up on one of the win-back campaigns.
That was the stock. That was the stock at the end.
Yeah, it was much lower, man. $8 maybe.
Yep. 8 or 7s. It might have been
somewhere
7.
like that. Yeah. So, the housing thing looks interesting. If you're any of you REIT players out there, I still think some of these mortgage REITs might be interesting. NOY, AGNC, 2W Hart. Be careful though; those are scary yield plays. Know what you're doing.
Sweet.
Any other questions?
Yeah, it's up to you, brother.
So let me just tell you guys. So if you're looking for a blue chip and you think that the market's going to hold up. Now, the market does need to hold up, but, you know, I'm long APP, all right, and just full disclosure here. So this thing has the ability to run 40 points a day. And so if you think about that, any of you guys that are options players out there, you might want to take a look at that. It might, I think the stock's over $700 before the end of the month. And
here's your short-term chart, Dutch. All you
Right.
need is that little
Yep,
curve to happen. In fact, you should know if you're wrong here pretty quickly.
right.
And what should happen is now you get this leg, you know, up out of that scoop and then get back up and try to fill this gap.
So I've
Right.
laid a bet out there for 700 plus on by the 30th. Okay, so I'm just telling you, I could be totally wrong. It is a blue chip. If you want to go just with the common, you can pick up. You know, maybe you can pick up 40 to 60 points between now. If we're right, now the market's got to hold up pretty well because it does move with the market, but it is probably one of the number one growth stocks in the S&P 500 because it's fairly new coming into the S&P 500, and they're still accumulating it in the you know, index funds. So there's a little bit of wind at its back there, and it's been pretty volatile here. But you know, it was what? It was over $700. It was 700 and what? Where was that thing?
738 and 745.
745. So, you know, it looks like it might want to make another run and run for a 760 kind of thing or something like that. And I think when it does it, and it's kind of coiling here a little bit. So
I think, Dutch, you're spot on. I think there's no way we lose 600.
yeah,
And I think you're going to get a big move up to all-time new highs because I just see the cues coiled up here.
yeah.
You can see the pattern on the daily really clearly. Here's the base. There's the triangle. We should leg up, guys. I'm talking 776. I think we're going to have a big thrust up.
Well, here's the thing, too. I mean, Atlanta Fed came out at 5.3 or 5.4%, right, on GDP. That was their forecast.
Hey, man, not
When
only
is
that,
when's that coming out? Because I think that's going to jack everything.
hey, that I saw. It's funny you bring that up, guy, because that Atlanta Fed number, and I got an anecdotal call from a buddy of mine who's in real estate in Miami, and he's a nightlifer, and he goes out and he's like, man, the clubs and the bars in Miami are booming.
Smoking.
People are out, they're partying. And I'm like, really? And he's like, man, it is booming down here. And I'm like, all right, guy, you know, and so anecdotally, guys, I think, you know, different parts of the country are having different experiences. I think if you're in Florida now, I think you're in Southern Florida right now, things are pretty, you know, outside of housing, I think they're pretty hot. You got a lot of people migrating to Miami from New York, California. So there's some regional things happening, but I think you're going to see the cues finally break out of this pattern. That's going to give Dutch that momentum he needs to get App up to new all-time highs. All right, guys. Hey, we're at a 12:26. You've been here with us for an hour and a half. We love you for coming and doing it with us. This was number 54. We'll see you next week at the same time for number 55.
Hey, Z, next week is federal. I think the market's closed Monday.
Should we do it on Tuesday or should we just do it on Monday? What do you want to do?
But Dutch,
Well, we should do it on Tuesday if no one's going to be around.
Let's do it on Tuesday then, Dutchman. So Tuesday
right.
it is, guys. So next week, change your calendar. That'll be the 20th of the January.
I'll make the changes.
Thank you, everybody, for being here. We love you.
Thanks, everybody.